Gen Z and millennials are lost when it comes to investing, but it's not their fault. Gen Z, which ranges from 13 to 28-year-olds, and millennials, which are between 29 and 44 years old, really are having a hard time accepting traditional investing values. I have to agree with that. Many baby boomers have been steering the young generation down a path of false hope, such as the idea that you need to go to college and get a degree to get a good job. While currently only 30% of graduates with a 4-year degree are finding an entry-level job in their field. Another area that's out of reach is buying a home to help grow their wealth. Today, only 32% of 27-year-olds own a home versus 40% of boomers and Gen Xers when they were 27. Thanks to social media and podcasts that encourage risky behavior, many investors, and that's in quotes, in the younger generations are turning to crazy investing options because they feel, well, the old ways have just failed them. The numbers are staggering from surveys, with results show as nearly two-thirds of Gen Z and millennials think the only way to build wealth today is with alternative methods like gambling and crypto. Other surveys show that nearly 50% of Gen Z own cryptocurrencies, and roughly 31% of 18 to 34-year-olds are online gambling with a sports book. So now they've been programmed to feel that a small chance for a large return is far better than losing money slowly over time. The younger generations have become very impatient. They would rather do something with crypto, prediction markets, and online betting that they can get immediate results and maybe even see gains come quickly. I think part of this comes from social media, where everybody shows how much they have and how wealthy they are, even though I'm confident they're probably not doing that well and probably have tons of debt on their balance sheet. I believe this is creating a false sense of hope for the younger generation that they can get a piece of the wealth pie as well. Well, unfortunately, this will probably not correct itself, and younger people, 10 to 15 years from now, will be in worse shape than they are now because they did not buy a home, they did not invest in a 401k, or any real investment, any real company that grows its earnings over time. I'm Brent Wilsey with Wilsey Asset Management. If you like these videos, well, be sure to get a like or comment, and feel free to check out our other YouTube videos and weekly newsletter for the latest economic news, expert analysis, and market insights.